Yeah, so all right, if someone can verify that YouTube is working before I get started, that would be nice. And then, yeah, I can get started right after that. So, okay, so quickly, this strategy is one that Kwonyoo uses. Kwonyoo's an Oracle member here in Asgard. Obviously, you guys all know that, but for anyone on YouTube, they may not know. Um, and actually, probably a few of you that are new don't even know who Kwonyoo is, but so he's been trading futures. I actually don't know how long, but he's extremely experienced, has a lot of knowledge on the topic. He uses a strategy that actually does not involve heat seeker. So Quan, correct me if I'm wrong. I think you may use it as a confluence at times, but this is something that is largely independent of heat seeker, right? So it's based on a lot of ICT principles in terms of fair value gaps, inverse fair value gaps, which I'll be explaining, liquidity, a lot of that stuff. So this session alone will not be enough to get through all the details. Like I think I'm going to give a basic summary, basic intro into how the strategy works, and how you guys can all use it. But anything, I'll probably be, I'll be talking to Kwon. We'll probably have to do a couple other sessions just to clear up any of the more advanced topics, or not topics, but let's say details of this strategy. So that'll probably come in the future. But for now, I decided just to give a quick breakdown just because I know many people have been checking his thread, learning from him, me included. So it's something that I felt was worth sharing with everybody. And yeah, thanks to Kwon for joining, helping out. Also, Nick, or well, Dr. Meat Seeker, he's also someone who knows the strategy quite well. So they're both in the chat and they'll be helping a little bit to fill in a few of the gaps because it's also something I've been learning myself. So I'm not full expert on it yet. And also, yeah, happy belated birthday to Kwon which he was celebrating over the weekend. So thanks for also volunteering your time on the long weekend to help out here. Okay, so yeah, so let me see here. So I'll be posting alongside this like a little checklist I made. Let me see if I can pull this up. Uh, I mean, even checking his daily tape reading every day probably puts you ahead of quite a few people. So I'll put you as a semi-expert. But yeah, I think someone who learned it like very, very well is Whack J. He has a lot of experience using it. Okay, so all right, let me get back. All right, this seems to be working now. All right, so this strategy is used exclusively on NQ futures. So Kwonyoo's trading exclusive futures. I think he's getting into options, but his the vast majority of his experience is in the future side. So um, this is purely applied to NQ. Obviously, you don't have to trade NQ. You can also trade the micros. If you're choosing to do this strategy, though, still chart NQ, and then if you want to trade with micros, you can do so. They typically will have almost identical charts. There are a few times actually though that a few of the wicks and a few of the gaps show on one but not the other. So I would recommend that you stick to just normal NASDAQ futures. Chart that, and then you can always execute with micros, which I would highly recommend, especially if you're learning and testing this out. Either use a paper account or just open up a new eval and test it with very small size, right? Just throw 2 to 3 micros. Just do small size while you're still getting comfortable with it, and then obviously long term, then you can decide what sizing you wish to use for that. But always recommend as you learn anything, right? Test it on your own, but test it with low risk, right? Same approach. If any of you have one-on-ones with me, or if you listen to my session the other night, I will always preach that we should learn and test new things out with the lowest risk possible, right? Also, hopefully a lot of y'all have listened into John's future sessions. Um, he goes over a lot of details in terms of if you go to his first session, I think he went over prop firms, like what is futures in general. So any of you that are new to that, I recommend you go to that session. So I'm gonna assume that most people have at least somewhat base knowledge of just what prop firms are and what futures are. If you need to fill in a few of those gaps, I would recommend you can probably just head over, watch John's intro session, and then hop back over to this one, right? So John has his recorded. This is also going to be recorded and posted on YouTube, so you can sort of piece it together. But yeah, John has a session that will also help fill in any gaps. And if there's anything missing that you're still confused on, feel free to ask me, or feel free to ask in the futures chat. There's a lot of people, very knowledgeable futures traders that can help out there. Okay. Yes. Yeah, good point, Nick. Paper trading is always going to be sort of your best friend, right? Hazy. Kwan. Nah, bro. Kwonyoo's not up at like 4 a.m. or something trading this in Korea. Um, Although getting up at 6 a.m. West Coast is already pain in itself. All right. So at its base level, Kwonyoo strategy entails, and I'll probably post an image or I'll list these rules in the description of the video. But at its base level, this strategy entails of playing 3-minute inverse fair value gaps, right? Now, I realize not everyone here knows what a fair value gap is, so that's where we're going to start. So a fair value gap is whenever we have, oh, other thing I'll say is he's always playing on the 3-minute chart on on NASDAQ NQ. So a fair value gap is anytime we have a candle where the wick sort of, it's a set of three candles, right? Creates a fair value gap. And what happens is as price is pushing in one direction, either up or down, if you get sort of a large body on one of the candles, the middle candle, and then the wick of the wicks of the previous and the following candle do not overlap, you get a fair value gap, right? So to sketch out a couple examples here, on Friday, we have a fair value gap. So we have a bullish one right here, right? So here what we see is we have, yeah, my computer's being really laggy. This is annoying. Okay, what we see we have here, right? We have a wick, we have this body that expanded through, and then we have the bottom of the wick of the following candle. Obviously, this bottom's really, or sorry, the bottom of this wick is really tiny actually, but this at its simplest form, this is a fair value gap, right? Obviously, this is a bullish one as price is moving up. If you want an example of a bearish one, you can look here, right? So there are actually always quite a few fair value gaps throughout the day. Like this is not something that shows up like super randomly, or rarely. I mean, like this is something that is actually quite frequent. So the strategy consists of anytime we get one of these fair value gaps created, what essentially is happening here is this is a volume imbalance, right? So a lot of times what will happen is that these levels can be quite strong and price will either bounce off of them or it will inverse them, right? For this strategy, we're focusing more on any of these gaps that get inversed, right? So, and when I say inversed, it gets created, price comes back through and closes the opposite way on it, right? So that's sort of at its basis what a inverse fair value gap is. And well, yeah, and probably the rest of this video I'll be calling them FVG and ifvg, right? So FVG fair value gap and ifvg inverse fair value gap. When now this is the basis, right? A 3-minute ifvg for this strategy, but there's a lot of sort of extra rules that Kwonyoo uses, because if you just go trade every ifvg, it won't end that well, right? So there's a lot of like extra context, and sort of like helpful rules and other like use of the MACD and a couple other things I'll mention that will sort of that make up this strategy, right? Okay, so yeah, if there's no questions there on fair value gaps, I'll keep going. So yeah, it's probably new for quite a good chunk of you. Okay, now apart from the fair value gaps, which I'm going to keep explaining as we go through, another thing I'll note is he also makes use of the MACD. So, and this should be available on TradingView or any other platform you're using, but he does not use the default settings. So he uses 26 and 100, right? So I think the defaults are usually a bit lower. So make sure that whenever you're coming and setting these, setting up the MACD, that you're adjusting these values to 26 and 100. And again, all these details I'll be listing in the description of the video. So if it's, you know, either take a screenshot now or this is something that will also be listed there for the future. Okay, and I believe all the rest of them you leave alone, right, Quan? I think it's only the fast and slow length that you're modifying. So then what's going to be, okay, thanks, Quan. And what's going to be important on the MACD, at least for now, is just if you're going to be looking at these bars, right? Either the green or red bars. He does make use of the lines themselves, but I think I'll leave that topic for a later session on this. For now, just to keep it simple, we'll keep it to the bars themselves. um, so actually, for now, I'll just mute the lines just to keep it simple for y'all, to make it a little bit more visible of these green and red bars. Okay, so a couple other ground rules. So when we are creating the fair value gap, right, and the inverse fair value gap, there's always two things that happen, right? One, there's the candle that actually creates it. So in the case of this bearish fair value gap here at 1118, this candle that's creating it is being created at 1118, right? So one rule Quan has is Jeff. Is that just Jeff or is it me as well? Okay, Jeff, fix your audio output. That's on you. Um, okay, thanks everyone. Um, so whenever we're creating this, the candle that creates the initial fair value gap, right? Whether it's bearish or bullish, we need that candle to be at 10 a.m. or later, right? So the initial 30 minutes, we're essentially not interested in any of those gaps that are created there, right? Um, so that is also another base rule. I think in terms of close of day, what was it, Kwonyoo? You don't play anything like the last 5 minutes. But probably for most of y'all, like the setups you'll want to be playing, at least for now while you're learning, a lot of them will just happen between that 10 a.m. to noon window. Sometimes they happen in the afternoon as well, but a lot of times these are quite evident in that 10 a.m. to noon window, just from the creation and then reversal of the 4-hour candle that happens during New York session. Shorty, is it New York session only? No, so I believe he also does it in Asia session. For the purposes of today, I'm going to be sticking to New York session, but possibly in the following video, I need to speak with him a bit more, but we can likely get a good compilation of examples from Asia and a couple of the other nuances. But yeah, it definitely can be applied during Asia session. I think at 6 p.m. open, he will sometimes take trades there, and also at 8 p.m. open, but we can leave those for a future video, I think. Um, unless you prefer to go over them now, Quan, but I think for now we can leave it to later. Because with this strategy, same as heat seeker, right? A lot of this stuff is dependent on high volume, right? So if we're sticking to New York session where we have the most volume, in general, most of these rules, same thing with heat seeker levels, they will be better respected if we're playing sessions that have more volume, right? Snickerdoodle, can we Snickerdoodle, I think you can, although I will say that this strategy at times will deal with a lot of chop. Obviously, on futures, there's no negative impact to chop, right? There's no theta effect. So it's something like I've seen plays where it takes 3 hours for these take profits to get hit, which on the future side is fine. You're always going to have the same profits, but on the option side, that would kill you, right? So I would need to think about that if it has like if it can apply every single time. But yeah, some of them definitely will, right? But I think at times there will be quite a bit of chop that might kill you out if you're on the option side. Kwonyoo, I actually don't know if you've tested this, like just taking QQQ. But I would imagine it would be not always like super extended moves, depending on the setup. But typically on this, you're going for a pretty short take profit. So, and those are some rules I'll cover as I go through this. Okay, let me see here. Yeah, so probably Nick or somebody else can send like the link to Obex's. He has a within coding scripts. He made a. I asked him, and he was kind enough to make like a little compilation of all his scripts in that in the code and script section in the education in the Discord. So yeah, I would encourage everyone to check those out and then save them. Yeah, thanks, Nick. Appreciate it. Okay, So getting back to Kwonyoo, that should give you, so sort of, we're using the 10 a.m., only 10 a.m. and after. We're using the MACD, right? So then the key here is if we're trying to play an inverse fair value gap. So for example, this one here that I've highlighted around 1121, if we're wanting to play this one, right, we need to ensure that the MACD is matching the direction of the inverse fair value gap, right? And conversely, so like this bullish fair value gap that was inverse to the downside, around 10:30, 10:40 on Friday, this would not be an applicable play, right? Because the MACD is opposing the direction of what we're playing here, right? So you always want to make sure that the MACD is sort of aligned with with the inverse fair value gap that you're playing, and that's going to be something else that you're always going to keep an eye out for. The There we go. Thanks, Nick. Appreciate that. The other thing is we are not actually taking entry on the fair value gap itself when it's inversed because, right, so if you look at this bearish fair value gap, right, we get created here. As we come and inverse it, the candle that actually inverses it is 1127, right? If you enter at the end of this candle, you're actually entering price up here, right? We are still seeking to enter the trade at the top of the bearish fair value gap. So essentially, anytime we inverse, we're then waiting and we're placing a limit buy where that bearish fair value gap was created and waiting for the retest to fill us and go, right? So obviously, sometimes we won't get that retest. Um, there are times where sometimes the play will run without it, but um, we should always be waiting for that retest. So we're getting in at the level that we're actually desiring, right? So yeah, for anyone that's new to features, make sure you know how to set up limit buys, and that's always going to be what you're using here. Pocket. Yeah, so pocket. When the fair value gap is when we get this gap created, right? So when the wicks, we have the body of the candle and the wicks do not overlap, the wick from before and the wick from after. Um, an inverse fair value gap is just once we create that fair value gap and we basically price reverses and closes and pushes through and closes above that fair value gap that was created. Hopefully that's clear, pocket. So we don't actually inverse it until the candle closes above, right? That gap. So that's something you would because sometimes what will happen is if you try to sort of front run it, sometimes the candle will just have a very large top wick and then sort of revert back down. So always wait for the candle close. Once you have the candle close and sort of the full setup is there and present, then you go ahead and place the limit buy at the level that we're looking for, right? FSC trade. So MACD, in terms of like what it means, FSC trades. Chamber, I'll go over where we're setting the stop loss in a little bit. Um, yeah, I'll get to that in a second. In terms of what the MACD is, I actually don't know. I'll be honest, it's something I don't remember like what the acronym actually is. Moving average, convergence, divergence. Uh, I'm not actually sure. Like, Kwonyoo, you may have to give a bit more insight there. Thanks, Nick, for that image. Differences to EMAs. Okay, thanks, Maestro. Thanks, Shorty. But yeah, FSC, like the important thing is, right, that we just want to make sure that the momentum shown by MACD is in our favor, that is matching with our thesis. And make sure you're using the settings that I mentioned earlier. So switch the defaults from and put it to fast speed at 26 and slow speed at 100. Thanks, Quan. Exactly, right? So if we're inversing this bearish gap to the upside, obviously then we want to see a green MACD below. Pockets. Yeah, so we want the fair value gap to be closed above, and then we're going to enter on then we take entry with the limit buy at what the level where the bearish fair value gap was um, created, right? At the top of it. And yeah, chamber, I'll go over the stops a little bit later. Okay, the last thing I'll say, so this is a classic fair value gap, right? That's just, okay, we create a bearish fair value gap, we inverse it, and now we have our bullish ifvg, right? We have our bullish inverse fair value gap. An additional rule that Kwonyoo has is that he does not just want to see the creation of IFVG, he also wants there to be a bullish fair value gap after, or included, right? So what I mean by that is obviously we have this bearish fair value gap here and we inversed it and pushed higher. He is also wanting to see a bullish fair value gap. So basically what is shown here, let me switch this to green, otherwise it's going to get a bit confusing. And I'll delete this one just quickly. Oh man, yeah, my computer's really slow. Okay, but essentially we have a bullish fair value gap here, right? Where top of this wick, then we have the body of the candle push through, and then the bottom of the next wick, they don't overlap, right? So we have a bullish fair value gap there. So the fact that we are inversing this bearish fair value gap, we also have a bullish fair value gap showing after, and as well as we have the MACD showing green, sort of shows us, okay, we have good momentum, prices pushing, and then now that this candle closes green or closes above, right, at 1127, he's seeking to enter. Let me see if I have the button for this, but he's seeking to enter price here, right? So he would have actually entered this trade on this white candle here. So this hammer candle showing at 1130, where we wick down, tap the top of the bearish fair value gap, and that would have been his entry, right? Now, one other thing is for all these entries, at least for now, this isn't true always, but he's seeking 50 points, right? So profit level 200, and then the stop loss I'll explain in a second. But he is always seeking a 50-point take profit, right? There are some extra cases, like some sort of unique circumstances, but we're going to leave that for. Oh, is it usually 100 points, Kwan? Okay, apologies. I thought it was 50. Okay, so 100 points. Whoops. Shorty, the entry is the level that created the bearish fair value gap, right? So if you look over here on this candle at 1115, right? The bearish fair value gap is from this low of candle to the high of the 1121 candle, right? So he's entering at the top of the bearish fair value gap. Hopefully that's clear, Shorty. Got it. Okay, perfect. Uh, 1 second, Quan said a few things. What did he say? I'm missing this. Oh, okay, okay. Okay, so if stop loss is above, so he trades almost everything with like a roughly 1 to 2. Yes, Trishul, this is being recorded. It'll be posted to my YouTube. So he keeps this risk reward to roughly 1 to 2, right? So when targeting 50 points, that means the stop loss is under 30 points. And then anytime the stop loss is 30 points or over, he's then targeting 100 points, right? New York session with the volatility experiences, you can likely target 100 points most of the time, especially in AM, AM in the morning. I'm not sure. The afternoon probably as well. Honestly, you get pretty good expansion there. Okay, so let me see here. Yeah, so the checklist here, right, is we want to make sure we have an IFVG. We want to make sure we also have an opposing, what he calls an opposing FVG as well, right? So obviously we have here the bearish FVG, bearish fair value gap that's getting inversed. So that's the IFVG to the bullish side. We also have a bullish fair value gap formed, right? We have the MACD matching our thesis and our direction. We're after 10 a.m. During New York. Sorry, y'all. I was yawning. And we're waiting for this to be confirmed and then retested for our entry, right? So that's going to be the sort of the brief synopsis of all of that. I think what we're going to do, so I'm going to go through a few different rules and just different examples just to get everyone pretty acquainted to it. Because it is quite a few different things to keep up with, right? Like it sounds simple on paper, but there's obviously as you look through different cases, there's many different scenarios that show up. Give me 1 second here. I had a checklist. I want to make sure I'm going through everything. Uh, Give me 1 minute, y'all. I want to make sure I'm not missing anything. Where did I have this saved? Ah, here we go. Okay, so there's a few other rules actually that I forgot to mention. So a lot of times, in terms of what is the minimum fair value gap, right? Some of them are actually very, very narrow. I think he's always looking for at least 1 point on NQ, right? Or for 4 ticks. I rarely, I guess I rarely say stuff in terms of ticks, so I'll just be saying stuff in terms of points, right? But at least a 1 point fair value gap is what he's making sure is his minimum. Um, okay, and then let me see. We're also going to be going over the extreme FVG. I'll go over in a second. Uh, okay. Okay, so I think that gives a good basis of the entire strategy. So obviously this is obviously like one comment I'll make here is like obviously this is a bit different to the heat seeker trading style, right? So actually ifvgs are basically you're waiting for a bit of confirmation before entering the trade, right? So that's the reason I say this method is used sort of independently of heat seeker, right? Um, but this is something Quan has been trading for years, I believe. So it's been very, very sort of extensively back tested. I will also be adding the link to his thread, right? So basically every day he posts every trade that he played, right, within his thread. So I would encourage anyone who's interested in this method, who wants to go learn, see more different examples, go through that thread on your own time and sort of just study and feel free to ask questions either within the thread or just screenshot it and ask within the futures chat, right? Like Quan, there's quite a few people that use this strategy very well. So Quan, let me see, myself to some degree, WhackJ, I think Nick knows it a little bit. Like there's quite a few people that use it. Um, so there'll definitely be enough people that can reply to any questions about it. And yeah, good point. Or yeah, good reminder, Quan. Anytime you're doing this, right, we're waiting for it to be inversed, and then we're making sure we're entering with the limit buy on that uh, a limit order on the retest, right? So key point here is don't try to guess, right? When are we getting inverse or not and get in early? Always wait for it to close, wait for that retest with the limit order. And if you don't get filled, you don't get filled. That's fine, right? So same thing as on options, like be willing to enter at the level that you like. And if that just never ends up getting filled, that's okay, right? Yeah, always remember in trading, it's like we're waiting for our criteria to be met, right? We're not trying to force anything at any point. Uh, okay, let me see what I want to go over here next. Okay, so I think one thing I'll go over is the case of extreme fair value gaps, right? So sometimes we're gonna have many. Yeah, my trading view is really slow. Sorry, y'all. So some days we're gonna have a lot of stacked fair value gaps, right? So, oh man, this is terrible. Yeah, I'm switching to Zoom. I keep saying that. I actually need to just switch over. I might just have to go pull screenshots out of my chat, honestly. Hazy, you don't chart like this? So yeah, it was Wednesday that has a pretty good example of an extreme fair value gap. All right. Yeah, Jesus Christ, this is laggy. Yeah, what do I? Let me close a couple applications. I don't even know what to do right now. I think it's just OBS that's breaking it. It's really annoying. Okay. So what will happen in the case of any steep sell-offs or any steep pumps, right, is that we're going to get stacked fair value gaps, right? So if you look at, what was this, Wednesday? If you look at NQ here, what you see is we have a fair value gap here, This is obviously a bearish one. We then have another one, right? Like we have a ton of fair value gaps sort of stacked right here. Then we have another one down here. So in these cases, at least for now, this is also a case where it's like this is a bit nuanced in the future. But for now, what you want to be knowing is that whenever we have sort of this structure and this big push downwards, any stack for value gaps, you're going to want to be, oh, I missed one actually. There's also one right here. Right, so then here the question kind of becomes like, okay, like yes, we've inversed one, we've inversed a couple more. Like at what point do we actually want to enter this, right? Like what is the decision making there? Yeah, wow, this is crazy lag. Okay. So the key here is whenever you kind of have like this structure, you have this consolidation, then we get a big drop and you're getting a ton of stacked fair value gaps being created onto the bearish side. You want to make sure if when you're looking to inverse this and play upside, you're waiting for the extreme fair value gap, right? And what we mean by extreme is sort of the first one created, right? So the logic here is, okay, if you're playing this reversal off the lower one, you're kind of longing into bearish fair value gaps above, which is always a bit riskier. So then if we're waiting for that extreme fair value gap to be inversed, that will then give us that's sort of what we want to be looking for, right? So there will probably be a few examples in the thread that I can probably send out about like specific cases of this. But a lot of times what you'll see here, right, is this extreme fair value gap. If it's not getting inverse, it likely shouldn't be a trade taken. I do think this Wednesday was a bit of a different scenario where it was like, okay, we had tapped it twice, and then on the third tap, then we expect to break through, right, due to sort of it being tested many times already. So, but yeah, just to highlight like what is an extreme fair value gap and how you find it, this is probably a good example here. Okay. So I went over that. I went over the take profit stop loss structure. Let me see here. Okay, a lot of times, actually, let me see what Quan is typing in case this is something that is important. Yeah, my Discord is bricked. First, okay. Oh, Quan sent like a little breakdown of everything that I just stated. Thanks, Quan. Yeah, I think yeah, Quan, if you can keep making that list and just text it to me afterwards, I'll post it in the description of the video. So people sort of can screenshot and have a little list there. Thank you for doing that. Okay, so extreme FVG. Let me see opposing. I think I went over all of that. Okay, so I think the next thing we can do. Yeah, pocket for now to keep it simple. So yeah, the opposing FEG did not get created until this candle pocket, right? Like this is the first bullish fair value gap that got created, right? Uh, there, right? But yeah, obviously, like this extreme fair value gap did not get inversed until much later. Yeah, for now. I think he does have some additional rules for like extreme sell-off days. So I don't think this is accurate for everything, but for now, like for the intro, just keep it to those cases, right? If you have the extreme fair value gap, you don't get it inversed with obviously an opposing fair value gap as well, then it's not applicable, let's say, right? It's not a case that we should look at least for now. I think we'll do a session 2 and maybe even a session 3 going over a lot of the sort of these additional rules he has because there's obviously there's the base set of entries, right? But there's also some subsets for sort of extreme conditions, alternate conditions when there's either higher volatility, steep sell-offs, and a couple other things that he looks at, or a couple other candle patterns or things he looks for. That yeah, I chatted with him. We decided we can do that in a separate session, just to keep this one more to the basics. Okay, so the last thing, a couple last things to go over. So I think first one I can go over. Oh man, let me go back to this example. Oh yeah, this is terrible. Okay, so I'll go through an example on Thursday, and then I'll also start to explain a little bit on how he's selecting his stop loss. I'll have the chart but I also have a couple examples he sent me through DM that I'll pull up, which should help out. So last thing I'll say here is I'll give the example on Thursday, right? So Thursday, obviously, we had a steep sell-off. This day. Oh, Kwonyoo's Thursday, not a good day to show? I thought Wednesday was. Otherwise, I'll flip to Friday. Let me get some water. Oh, there's actually someone watching on YouTube. Oh, Blair? I thought Blair was in here. But yeah, Blair, well, fair value, normal fair value gaps a lot of times are used as continuation actually, but inverse fair value gaps are reversal plays, just with that little bit of confirmation used, right? Okay. All right, so obviously Thursday, right? We had a few things going on here. Let me blow this up because Thursday, obviously, we had a steep sell-off. So then what happened is we were finally consolidating. Um, so here, what we have is, okay, we have a bearish fair value gap created here. Obviously, this never got inversed, right? We never had price close above. We also never had an opposing fair value gap, right? So there's no entry here. We then later came and had another bearish fair value gap closed here. Sorry, not closed, created here. Obviously, we had no bullish, so this did get inversed technically, right? But we had no opposing fair value gap at that point. MACD is green. We did not get an opposing fair value gap close until up here, right? So this is obviously later, and obviously this is price was above the entry, because obviously here our entry is actually, I don't know if, yeah. So obviously here our entry is down here at around 24,853, right? So in this case, this was at the time, right? It looked like an entry that had sort of gone without us. Oh, but if you realize, we did eventually come back down, retest, and we got that full play that we were looking for, right? So that would have been roughly here, and then obviously targeting. Let me fix this real quick. So targeting. So what is it? 400 ticks. I guess in this case you would have targeted 50. So Quan, when you're in a trade that doesn't go for 100 in New York, do you put break-even stop loss at 50? It's actually, I should have asked you this before. It's something I just thought of. So a 50-point play here would have taken profit, but yeah, I guess need to see what Quan says about this one. Okay, but yeah, so the entry here would not have been until we retested much later on. Is the point I want to make. Oh man, got tired. Oh, right, it's also based on stop loss. Okay, yeah, so I've shown quite a few different examples. I think now we can look at sort of how's the stop loss actually being set. So in most cases, you're setting your stop loss to, give me a second here. I'm gonna open the chat with Quan, so I'm not gonna be reading the Discord one for a second. Or not the Discord, but the stages for a moment here. Okay, so for stop loss, right, you're usually going to use the candle that created the actual inverse fair value gap. Inverse fair value gap is going to be where you're going to set the stop loss. This is subject to change based on like how strong that candle was and sometimes like the size of the fair value gap itself. But in ideal cases, we're going to be using the candle that creates the ifvg, right? That's where we're going to set our stop loss. So I guess in this case, uh, sorry, one second here. So in this case, we're looking at, I guess this candle wick here. Kwon, correct me if I'm wrong. So you'd have your trade entry obviously at the top of the bearish fair value gap, and then the candle that created it, that's where you're placing your stop loss there, right? And so this ifvg is, one second here, 837 up to 852. Yeah, so this is under 20 points ish. So then you'd be targeting 50 points, and then obviously from entry, that was what, a couple candles before getting filled there. Now in the cases where, let me head back to the, yeah, but Quant Thursday, that was mostly continuation plays down, right? But I guess just in terms of the, I guess in terms of this play, right? That would have been the stop loss there for those longs. Yeah, actually, I need to explain the continuation as well. I'll go over that after this. Okay, yep. Thanks, Quan. Okay, so the only other cases you're gonna sort of deviate from this is there gonna be cases where the fair value gap is too large, right? So we have dealing with a much larger fair value gap. That's going to be cases where, okay, if our stop loss is looking towards 30 points, then you're going to want to be looking at extending your take profit and also extending the stop loss. So let me see. I think I have an image that I can pull up on Chrome to show. Hopefully the resolution is good. So give me one second here, y'all. So where's a good example here? Okay, I think I found one here. Sorry for the wait, y'all. Hopefully this quality is good. Ah, shoot, maybe not. Okay, it's good enough. And then there's another one for, so this is when the opposing fair value gap is below. Then there's also one where structure high. Okay, here's the one that I wanted to use. All right. Okay, found it. Okay, so in this case, so here we have, oh, my bad. Is this quality bad? Is this somewhat legible here? I think it's going to be a little fuzzy on the numbers. It's a little bit fuzzy on mine as well. So yeah, sorry about this. Can I just send this image in the chat? Maybe everyone can open it on their computers that way. Yeah, I don't know if this helps with quality, but hopefully if y'all open these, this can help a little bit. But anyways, the point here, right, is that we have our bullish fair value gap obviously on the left, right? I wish I had a little pointer, but so we have two, right? Obviously, we're looking to inverse the lower one if we're doing a bullish case, right? Because we want to inverse the extreme fair value gap, right? We have the opposing bearish fair value gap created up here around, this is like what, 1250 maybe? And then we later come through and we actually inverse the original bullish fair value gap down on this candle here around 120, 115. Since this candle, the sort of the top wick is actually within this fair value gap, this is going to be a case where you want to extend the stop loss to the recent structure high, right? So instead of having it here, because this is still within the fair value gap, so like we know that price can sort of range in it, or it can sort of retest and push. As long as this holds this fair value gap to the downside, or sort of this inverse fair value gap, it'll be okay. Since our wick is within that gap, right, our stop loss would be at risk of getting tagged out when it shouldn't be. Then in these cases, the stop loss is extended to the recent structure high, right? So, candle previous, use that as a stop loss. And then since this was over 30 points, then we're also getting our take profit extended to 100 points, right? So this is going to be one alternate scenario. The other scenario for the fixing the or modifying the stop loss is the one I'm about to send here, which is, okay, we have our bullish fair value gap was created, price got inversed the fair value gap, then created the bearish fair value gap, right? So obviously this was created after this sort of push down. So then at this point, you'd be saying, okay, now it's been created. Then you go ahead and set your limit order. So your limit sell at the level of the fair value gap. But obviously in this case, the stop loss, what you do here is you also push it up towards structure high, right? Because the candle that inverse and created this bearish fair value gap. Sorry, yeah, the candle inversing is, or sorry, what's the case here? Because this one was sort of created after, right? So the previous examples that shown the bearish fair value gap was actually, or the opposing bearish fair value gap was created before we inverse the fair value gap, the original one. Once that actually gets inversed, and if this is created afterwards, then we also use the structure high as our stop loss. Okay, so that should be, those are sort of like the three different cases in example one. This example pocket? Yeah, so there was, but it's all the way up here, right? So if you notice, it's much, much earlier. So that's the thing that is a bit unique about this strategy, right? It's that the opposing fair value gap does not need to be actually at the same level of the original one you're trying to inverse. So many futures traders, if you look up BPR, or I think balanced price range is the meaning, they're essentially playing this same strategy, but only when it's aligned with the same levels, right? So they're assuming that fair value gap is going to be the same, bullish and bearish, the same sort of zone, right? Kwonyoo is a bit unique where he's considering opposing fair value gaps even if they're not aligned with where, even with that gap you're looking at, right? So this small one that was created up here at the top pocket is the opposing fair value gap in this example. Does that make sense? Okay. I'll take the brain as you understood. Okay, so I think that went over the setting the stop loss. Obviously, setting the stop loss, there's a bit of judgment there, or not judgment, but like it takes some time to learn, right? Because there's a few different scenarios. Sometimes you're using the candle that inverts the gap. Sometimes you're using structure. Again, any questions there, or just any questions on strategy in general, feel free to send them in futures chat, right? Tag me, tag Kwonyoo, tag whoever, or just send them in there and someone will get eyes on it and sort of get through and give an answer. Okay, so I think I went through basically the core of the strategy. The other thing I'll say is, what's the last thing I wanted to mention? Yeah, hazy. So yes, this is distinct from heat seeker strategy, right? Of like we're trying to get in on the exact bottom. In this strategy, we're waiting for a confirmation of reversal and then entering, right? So it is a difference in strategy. A lot of people in futures trade inverse fair value gaps. So if you look up like, I think there's some guy called Tempo Trades, there's some guy called Dodgy, DD. Like there's a lot of people that use these. I think even T Trades on YouTube does it. But that's just like more of a pure future side. So like they do a lot of ICT concepts. I don't recommend all the ICT stuff, but a lot of it is quite useful actually. Um, so a lot of them will use ifvgs. A lot of futures traders in the future space. So it's more of waiting for a reversal and then a retest. Yeah. So it's like confirmation of reversal hazy and then a retest and getting an entry on that retest. Blair, this is applied exclusively on 3 minute for NQ. I don't know if Kwonyoo has actually tested this on ES or different time frames, but I guess I haven't known Kwonyoo that long, but from the minute I learned of him, so like in Asgard, he's been doing this 3 minute and NQ, and that's always been what he's applying it for. So there's no need to look for a higher time frame context. So Jen, there actually is some need to look for higher time context in terms of liquidity. We're leaving that for a separate session just because that involves a bit more judgment. But I think what I can do is in the futures chat, if there's ever any like very obvious resting liquidity that is probably going to need to be taken out, I'll try to send a chart out about it, just so you guys are aware. So there's a few other like liquidity targets that we're not going to cover in this session that we'll leave for a later session. But to not leave anyone stranded, we're still gonna. I'll do my best to give a few updates within the chat on potential higher time frame targets that we may be looking for on a given day. Um, but yeah, for now, like for the core strategy, right? That I guess that you guys can start to practice and implement. We're gonna keep it just to as simple as possible, and also just to not make this session 2-3 hours long, right? Like I guess we're trying to do one session, and then later we'll go over anything that we missed in a future one. Okay. Last thing I want to mention is Magna's in here. What's up, man? Last thing I'll mention here is that especially on Mondays, like I know Mondays he really likes to do this, but on other days that are like trending very strong, a lot of times he'll just play continuations, right? So instead of looking for like large IFE, sometimes there'll be IFEG continuations, but sometimes it'll just be fair value gap tap continuations, right? So, and I'm trying to actually let me quickly go to his thread and see if I can pull one from a Monday. I don't know if Kwonyoo, if you have one that you can just send in there quickly. Yeah, I didn't think of grabbing one from Monday. I forgot. So, what was that? The 9th? Okay, here we go. So a lot of times on Monday, right, we'll get a pretty strong surge and just trend from one direction. So a lot of times, um, he won't play the actual inverse fair value gap. He'll actually just play the fair value gap retest and long based off those. Obviously we're still using our MACD confluence. Let me send this in the chat. I know on the screen share it's kind of blurry. Okay, so I just sent this one over as well. But essentially what's happening here is now we're getting a bullish fair value gap created. We're closing above, MACD is staying green, and then what he's playing here is any kind of retest of that fair value gap, he's longing it, right? So this is just an example from the recent Monday that just happened. So if you look, the first two trades he took were just continuation plays. But that third trade he took, let me see here. Actually, I think that third trade is just a bearish fair value gap. It's not actually an inverse fair value gap play. But yeah, yeah, obviously bearish fair value gap matched with MACD. Correct, Juan. Got it. Okay, Jen, I do believe he uses an indicator. If he has his trading view up, hopefully he can send the link. And I think also the next session that we do on this, we're going to talk a lot about all of the different sessions. So Asia, London, and New York, a couple kill zones. So there's a couple indicators we can use there, and a lot of this higher time frame liquidity. But for now, if we're sticking to New York, it shouldn't be something that needs to be focused on too much for any of y'all learning this. Okay, in that case, Quan, can you please? Is there anything I'm missing here, at least for today's session? I know we're just around an hour, so I'm trying to make sure I don't miss anything large. Then we can take a few questions and then probably cut it here for right now. We'll try to do the second session in March. I would do it sooner, but Thursday I have to leave for New York for the boot camp. So um, yeah, I won't have my home set up to stream until March. Yeah, so there's two indicators. There's the one Kwonyoo sent, and there's one that Nick sent, or I can send it. He actually didn't send it. But yeah, as I said, this is meant to give everybody an introduction. There's some nuances. There's some edge cases. There's going to be some days that, due to strong sell-offs and other things, that we look for different signs. So I'll do my best to try to put a couple warnings out of like, okay, maybe this is a day you don't want to be using the normal strategy, that you may need to look for some of these other edge cases. But I think we're going to try to, or not, we're not going to try, we're going to put together a second session to go over a few more of the advanced topics. So I will speak with Quan, try to get a plan together there. But for now, we only sort of made a checklist and a plan of this initial core content. Um, but again, Quan is always available. He's always been very, very happy to help everybody. He's taught since Asgard started. I've seen him teach quite a few people, and a lot of them are having great, great success. So if you're able to learn it well, look for a lot of the different cues, right? This is something that I've seen a lot of people use very effectively. Okay, if not, bring my yeah, I don't know about that pocket. Hazy. Oh, Hazy, you live in New York? Yeah, yeah. I'll text you. We can meet up Friday or Saturday. Yeah, I'm gonna be there before anybody. Brooklyn. Okay, sweet. Yeah, I have some relatives over in Queens, or maybe it's Brooklyn. Actually, I don't know where they live, but it's somewhere over there. So yeah, I might swing by their place, but then I'll text you and we can do something for sure. Okay. And any questions that I can answer or that Quan can answer? Otherwise, what I'd recommend everybody do is obviously forward test this as days go on. What I recommend is you just open a paper trading account on TradingView, test it out. If you're probably going to get a few of these reads wrong, especially if you're very new to fair value gaps, don't worry, just test it, send it into the chat, right? If something's not going right, you don't know what went wrong, send it into the chat. Kwonyoo will take a look. I'll do my best to take a look in there, and we'll help all of y'all get accustomed to it, right? Um, Also realize there's a session 2 that's coming of this that will explain a lot of these other details that we kind of skipped over today, just for the sake of time, and so I can prepare that session a bit better. So there will be a second session coming, but for now, you guys can use sort of this base concept, and then later on, you'll sort of learn a few more of the details that will help you out a lot. Um, so yeah, clearly, I feel like at Quan's P&L, obviously he does very, very well. Um, and yeah, I've seen there's been a couple members even within this server that I've seen learn it, and they do extremely well. So like WhackJ, someone I talk with him every day. He was WhackJ was actually might have been the first or second person that joined the original boot camp last time in May. Um, so I think he was the first actually, and then I came in. I was third, I believe. But he's someone that also picked up quants, and he's had a lot of success on futures using it. So if learned properly and applied with discipline, this is something like any other system, right? It can be very, very effective if learned and executed properly. Yeah, no problem, Fern. Okay, what Blair, how can we still watch Blair, his stuff is John's videos are on his YouTube channel. DM me if you need me to send you the link, but yeah, I can do that. Although he just recorded his earlier, so I don't think that'll be posted until a bit later. Yeah, Magna, I will. Give me a second. Let me finish this up. I'll end the live stream recording, and then I'll make sure I can transfer everything over to you so you can yeah, so Hazy and y'all can chat and do all of that. Pocket, can you wait? Sorry, what's Pocket's question? Can you refresh me on when you just use fair value gap plus IFVG? So Pocket, all the plays should be inverse fair value gaps plus an opposing FVG. The continuation fair value gaps, those are usually Mondays. I would honestly just skip those for now, right? Maybe you can focus on the inverse fair value gaps with the opposing fair value gaps. Um, but a lot of times Mondays we trend pretty hard, so those scenarios don't show up. So a lot of times you'll play these sort of continuation fair value gaps. Yeah. So I think Quan, sometimes you also said Fridays will go one way, I think, but recently they haven't, I'll be honest. But I think the rule is actually Monday and Friday, if I remember correct. Is this getting reposted? Yeah, Big M, this will be on my YouTube. I'll send or DM me and I'll